If you look around the world at the moment, you have what we just talked about. You've got the China situation, you've got Italy, it would seem hell-bent on challenging the Eurozone. You've got Brexit, you've got Argentina, you've got Turkey, you've got the possibility of a populist of Mexico. You've got all these things, and yet the markets just seem to shrug their shoulders. Is political risk not really a factor?
Well, two things. You could separate them, talk about the risk. A lot of the risk in the world today, or a concentration, there's a lot of risks in the world, but a big concentration of risk today, is sovereign risk. We're looking at the politics, but you can look at, the economic situation. A lot of the, if you look at it, a lot of the leverage in the world that was with the banks didn't disappear from the world. They migrated over to the sovereign. So you see that the sovereign in the U.S., we have a $4.5 trillion balance sheet. You look at Euro, similar amounts. Japan, similar amounts. $15 trillion of debt on sovereign balance sheets, that the banks are deleveraged, but now the risks are with the sovereign. And
does any of those particular sovereigns worry you? I suppose Italy would be the one.
Well, of course, for a variety of reasons. One, it's got huge amount of debt. The debt might be big. The debt might be big for its partners. In 2011, when there was a sovereign debt crisis in Southern Europe, the issue was, is there the willingness of the ECB, i.e., is there the willingness of Germany to sort this out and to back it up, to back up this Southern Europe situation? Now, those lines never converged. The sovereign debt of these Southern European countries, especially Italy, had continued to widen out. They were getting an interest rate subsidy for being connected to Germany, but they didn't deploy that to reduce their debt. And so I think at this point now the question is not the willingness, but the capacity to do it. Now, one thing about the U.S., it's sovereign. U.S., we print the money we borrow in. Japan prints the money it borrows in. There's a lot of risk and consequences to printing too much money, but that's not necessarily a systemic moment. It'll cause inflation if you overprint too much money, but that's not exactly going off a cliff. On the other hand, in Europe, everybody borrows in a foreign currency. Italy doesn't print euros. Yeah. It doesn't borrow in lira anymore. It borrows in euros. So it's always more worrisome how one would deal with that. And of course, there are rules that the countries in Europe use to protect their fiscal policy. And again, I would say that issue, and obviously immigration, are the big risks to the whole construct of Europe at this point.
You see Italy as the biggest sort of sovereign threat.
Well, it was in the news yesterday, but look, it is, and also because of its size, and that was there for a while, but also because more recently of their election of a more,
an unusual coalition.
Well, getting more usual all the time. Yeah. If you look at what happened obviously in Central Europe, might even say what happened in the United States, the weakness of Mrs. Merkel in Germany, you're getting again, I don't want to merge these two things, but the financial risks of these countries, and also the kind of immigration issue, which creates some stress on the establishment governments, which feed into the financial, financial crisis, and that creates the geopolitical risk.